Hey everybody, it's Norris with the Norris Group. It is September 14th, and is it better to buy stocks or a home? That and much more as we cover the biggest headlines in real estate. You're not going to want to miss the radio show and podcast this week. We have Nick Bailey. We met Nick a few years ago at I Survive Real Estate, where he was the VP of Broker Relationships at Zillow Group. Now he did a very unusual move to Century 21, one of the biggest global brands in real estate, one of the stodgiest, well, used to be until Nick came over and they've started to rebrand, invest in technology, and we cover everything on that move and plans ahead for his realtors. And one of the most inspiring moves I've seen in the industry, especially going from a tech company to a company like Century 21. You won't want to miss that on the podcast this week. The amount of mortgage credit available decreased last month by 0.3% according to the Mortgage Bankers Association. Household income increased 1.8% last year according to the Census Bureau. Mortgage rates increased for the third week in a row, with 30-year rates now at 4.6% and 15-year rates at 4.06%. And home loan origination decreased to their lowest in 4 years in the second quarter, down 16% from the previous quarter and 27% from last year. That refi business is suffering. Baby boomers are about to become the largest generation of retirees in the history of the United States. So how are seniors affecting the housing market? Well, Trulia shares with us some of the biggest impacts they're having. Senior households are delaying downsizing, they're working longer, and their kids are living with them a little bit longer, so they're just hanging out a little bit longer in their houses. Senior households with no younger generation living with them on average have 2 bedrooms extra compared to those that have kids and they only have 1 extra bedroom. Households under 65 on average only have 1 extra bedroom, so the boomers are hanging on to some of the bigger houses. Seniors aren't holding on to inventory in places where housing inventory is most needed. So in the metro areas, they're actually getting out of those areas, which tend to be more expensive. And aging boomers are staying in place a little bit longer than previous generations. It'll be interesting to see in California. We have the bill coming up to where seniors will be able to move their basis in their current house to another location anywhere in the state of California. Some counties you're allowed to do that, some you're not. So if they make this a statewide function, will more seniors exit more expensive metro areas and move to less expensive places in the state of California? If not leave altogether. That'll be very interesting to see in this upcoming election. 44 million homeowners with mortgages have tappable equity, which passed $56 trillion for the first time ever recorded, according to Black Knight Financial. Tappable equity grew by $256 billion in the second quarter of 2018 alone. This is now nearly 3 times as much tappable equity available than at the bottom of the market back in 2012. So there has been a noticeable slowing of equity growth from Q1 to Q2, and higher interest rates appear to continue negatively impacting home equity utilization, so people aren't tapping it as much. While $65 billion in equity withdrawals via cash-out refis of HELOCs was a seasonally expected increase for Q1 in 2018, this was down more than 3% from last year. But let's be honest, is it really that bad to have equity that you're just not using as an ATM machine? Maybe we have learned a little bit something from the last downturn. It's that time of year again. No, it's not the Oscars or the upcoming elections. It's Sherwin Williams Color of the Year, beating out favorites like Dover White, Agreeable Gray, and Snowbound. Cavern Clay SW7701 is the 2019 Sherwin Williams Color of the Year. Ding, ding, ding! Cavern Clay, as they describe, is a warm terracotta color with ancient elemental roots and a nod to mid-century modern style, but with the soul of the American Southwest, which together creates a desert modern aesthetic. Well, to me it looks like a day after I've had a really bad sunburn, just without the blisters. So I gotta admit to you, I sort of like the 2018 Color of the Year, which was Oceanside SW6496. Looks like I'm gonna be out of style again for 2019. That's nothing new. Combine a strong economy, low unemployment, and the sigh of the biggest home buying generation, and you have housing demand that is built up that could be very exciting. That's according to Century 21 CEO Nick Bailey, who happens to be on a radio show this week. He was on CNBC talking about the housing market. He went on to say that millennials want homes just as much as any other generation, and with the sheer size of the demographic, it could spell a boon for the housing demand. Well, millennials may be late to the party just because they have a whole bunch of school debt and they waited to get get married and hang out with parents' house doesn't mean that they don't want the American dream more than anybody else. Up next is Generation Z right behind them. So who the heck is Generation Z? They were born between 1995 and 2015, and while some of them are just 3 years old, the oldest of the bunch is now 18 to 23 years old, and they're actually starting to buy houses. And they are showing some different buying habits than the millennials. According to a new study by Property Shark, Generation Z home buyers are going to gravitate to the suburbs, with almost half of them preferring the suburbs, another 30% preferring city life, and only a small fraction looking for that rural kind of life. Though they have some of the same barriers as millennials, student loan debt, down payment, and job insecurity, 83% plan to buy a home in the next 5 years. That's a huge amount. The oldest of the Gen Z now at 23, so hey, 100,000 have already bought houses. That is no joke. For those of us looking to get in the way of that market and to market to them their favorite hangout places, you'll find them on YouTube, Instagram, and Snapchat. Gosh darn it, I'm going to have to learn Snapchat. The Great Recession officially turned 10 years old this week. The world will never be the same, but some of the changes aren't exactly what everybody was expecting. Redfin spells that out in a list of 8 major changes that were unexpected, and here are some of the top ones. The government passed laws that ensured only the wealthiest half of Americans could borrow and buy at a time when prices for stocks and houses were at their all-time low. The fraction of Americans renting their homes increased by 13%. The builders never recovered. Maybe recovered is the wrong word, but builders have never gotten back to their building boom that they did back right before the downturn. Builders are cautious about big, risky projects and wary of reforms that make homeownership lawsuits easier to win. Number 3, real estate disruption. Private capital invested in real estate technology companies increased from $28 million in 2008 to a projected $3 billion alone just in 2018, with almost all of it going towards disruptive brokerages, low-cost brokerages, not ad-driven listing search engines like before, or sites. Now we have companies like Redfin, Opendoor, OfferPad, and Zillow actively competing to buy directly from some owners or sellers. Number 4, Wall Street bought Main Street, buying whole portfolios of cash, pricing out a lot of middle America, and some of them they bought directly from the federal government, which was a bummer. Finally, we lost faith in institutions. Millions of people lost their homes, and the government chose not to prosecute the bankers, the traders, the CEOs, and the rating agencies that all allowed it to happen. Nobody really got punished for it, and the taxpayer supported and bailed out everybody. You'd hope we'd learn more. This next time around, we'll have to wait and see. Finally this week, I'm not going to lie, I am so tired of these articles trying to compare stocks to home ownership. And for those of you in real estate, I'm hoping you're feeling my annoyance. So a Business Insider article this week titled, "Is buying a house better than investing in the stock market?" We did the math and the answer is clear. Not really. So the article talks about a little more than comparing house prices on average nationwide to stock prices and how it's run since the downturn. And of course, stocks have done better. It's been a wild ride. From down in, I think, the 5,000, 6,000 range, we've touched 20,000 this year on the stock market. So it sounds great. However, can you live in a stock? Can you rent a piece of that stock out to somebody who can live in it and earn extra income? Can you build a home in a stock? Can you get the federal government to loan you hundreds of thousands of dollars against stocks so you can make enough income to even make it make sense? I'm so tired of people comparing stocks. It's just not the same. What did I miss? I would love your feedback. Are these stories driving you nuts? Because they're driving me nuts. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Well, we are winding the year down. We're only going to be in a few more places this year, so September 21st, a market update with the Chino Valley Real Estate Professionals, so in the Inland Empire area. September 28th is I Survive Real Estate. We will likely try to live stream. We've been sold out for a number of months. We'll probably try to live stream on YouTube. We'll see how that works this time. It didn't go so well the last time we tried, but we'll try. October 27th, Cutting Edge Financial Tactics Brunch. This is the brunch that you can find on Amazon Prime from last year, and this year is going to be a little bit more advanced. It sounds like a joke, but we've got a CPA, an attorney, a self-directed IRA company, a 1031 exchange specialist, and Bruce Norris all on stage answering more advanced questions. So whenever you go to a professional and they say, talk to your attorney or talk to a CPA, that's exactly why we're having this event, and it's some of the beefiest content that we ever produce. So if you want to attend live and ask some of your questions, check it out, sign up. It's low cost, and it's on Saturday, October 27th. For more information on hard money lending, including fix and flip, buy and hold, and new construction in California and Florida, check out the norrisgroup.com. Or if you want more information in passive investing with trust deeds and notes, check out tngtrustdeeds.com. And with that, have a fantastic weekend, and we'll see you next week.